Well, good evening, everyone. It is November 11th, 2025. We're looking at Bitcoin at, what are we at? 1028 or thereabouts. After a pump and people expecting it to move higher, the mood continues to be morose. All the indicators, including all the various fear and greed, say Bitcoin should be dropping. All the technical analysts are saying it should be dropping. The 4-year crowd, 4-year cycle crowd are saying it should be dying. And I thought it was a good time to actually re-explain the bull case for those of you who care. So there's two parts to the bull case. The first one is the fundamental reason. Why is Bitcoin being bought? And the second is what's the technical state of the market? Well, the fundamental case is Bitcoin will ultimately replace gold or more as a monetary asset. The technical case is the market's been basing for a year. We can call it distribution, you can call it a range, you can call it anything you want, but it's basically the OG sellers who are selling over 100,000 and the new buyers, whether they're in ETFs or in MicroStrategy, et cetera, or even some of the Bitcoin treasury companies before they started to puke out their holdings. But the fundamental part, it's pretty straightforward. Gold is a market cap above ground of around 28 trillion and about 7 trillion in known reserves below ground. Now, I'm not including asteroids or new things that haven't been. These are recoverable reserves by miners. That's 35 trillion bucks. But gold is a monetary metal. And at least, in my opinion, 80% of its value is from a monetary side. And if you ask me, where do I come from that? It's simple. Gold today trades at about 2.5 times platinum, which for most of my life was about double the price of gold because platinum is much rarer, actually 30 times rarer, and more valued by women in jewelry. God knows my wife wanted a platinum wedding ring. So if you look at that and you say, well, half the price to 2.5, well, that gets you to about 80% is monetary. Multiplying that out, that makes gold's monetary value fully diluted around $28 trillion. Yet Bitcoin's fully diluted market cap is hovering just over $2 trillion at today's prices. So looking at that, you think Bitcoin, if you believe it is as good as gold, it could rise to equal gold, except it's better than gold on monetary characteristics. It is significantly more transactable. It is native digitally, can be used without having to trust a counterparty that it is right. Plus, Bitcoin is impossible to counterfeit. Gold is relatively easy to counterfeit, meaning you have to trust people. They have to have huge balance sheets and you have to insure their deposits. Plus, Bitcoin is cheap to store, cheap to transport, and doesn't require massive vaults like Fort Knox, which cost tens of millions of dollars just to maintain the vault. It is more divisible. It is fully transparent. You know where it is, when it is, and supply is limited programmatically. You don't have to worry about an asteroid or other mining that happens. But the result is even if the dollar holds its value and fiat currencies become strong again, which if you believe that, I got a bridge to sell you. But if it happened, as the Bitcoin network grows and it gains acceptance, it'll likely rise by 10%, 10 times this or more, because there's a good argument to be made that the system of fiat is collapsing on its own weight. That's the so-called debasement trade. I'll talk about that in other videos, but plenty of people are talking about it. You could go to Lawrence Lepard on the Big Print or many others. But the dollar's not holding its value. So we know that gold is moving higher also. This sets up a really interesting historical parallel. In 2021, the first person to talk about this was Paul Tudor Jones. He said then Bitcoin is the fastest horse as the debasement started to happen. And we remember what was happening in 2021. That was when we printed $5 trillion and almost printed a bunch more during COVID. What is fascinating about that period of time and really does need to be repeated is in May of that year, he made the pronouncement. Bitcoin did nothing. It literally sat there from where he said it around 10,000 until October. And then it started to inch higher in October. So 5 months of going up and down, people getting morose, people getting surprised, etc. And then it started to move little by little, 12,000, 14,000, by November, a little bit more. And we all know what happened since. In the ensuing 4 months, Bitcoin rose to over $60,000. Well, that is a big deal. Actually, it was May of 2020. I'm sorry, I didn't got it. And then 2021 is when the rally happened. But you get the idea. The fact is we've seen this story before. Now, history doesn't always repeat, but it can sometimes rhyme. But let's look at the technical part, because the first thing is the myth of the 4-year cycle. And I want to talk about this because I think that it will die soon. Why was there a 4-year cycle in Bitcoin? Well, specifically, the 4-year cycle was the halving happens. People are scared shitless that Bitcoin's going to fall apart, that the miners are not going to have enough incentive to continue to mine. And so it took 6 months or so for people to realize, wait a minute, the network is still growing. The miners are okay at this new level. And that's when Bitcoin went off on its big rally. So you had the halving, you had a delay, you had a rally. It then stalled as the money rotated, the hot money rotated from Bitcoin into altcoins as people jumped on rallying. Bitcoin didn't fall during that last period. Then that euphoria eventually subsided and everything took a dump. Bitcoin and the altcoins, with the altcoins dropping more. And the cycle repeats as we go into the next halving, et cetera, et cetera, et cetera. The problem is that the difference in supply from now to the rest of the Bitcoin halving cycles is irrelevant relative to the amount of supply, the amount of demand that's going on. It's actually not just a footnote, meaning that there is no fear about the Bitcoin network. And in fact, if you look at the Bitcoin hash rate chart, it's increasing at a geometric pace. And that becomes really important in a second when we talk about what does that matter. So what is actually happening? Well, the supply that has been coming out of the market, which defied a lot of the true Bitcoiners who said Bitcoin is totally inelastic to price, meaning you can't mine more because there's price, and that's true. But supply is not inelastic to price. The OG sellers are selling. The people have gotten unimaginable wealth, and they're saying this is a pretty good price to cash out, at least partially. I go to buy my wife, my mistress, the diamonds, the yachts, the planes, whatever. Set myself up, take care of my family. I'm not trying to make fun of these people. These people took big risks, did really well, and they deserve to get what they deserve. And the truth is entrepreneurs from the beginning of time have always been that way. But entrepreneurs don't generally sell everything. They generally sell some at a level to get where they need to be, and then they wait and they scale up and they sell at later prices. The demand, on the other hand, is coming from newer buyers. In fact, even after all of the carnage of the last few weeks since October 10th, less than 2% of the Bitcoin ETFs have outflown. So most people are holding for a very good reason. Why? First of all, they bought at higher prices, around these prices, basically on average. But even so, they're buying it because they're looking for a 10x gain. They're not buying it to worry about 1 or 2% or 10%. That's just not relevant. We did, however, see a big event. Last month, a month ago, on October 10th, there was a massive liquidation. Now, $20 billion was liquidated compared to $60 billion when Luna fell. So keep those in mind. But only $5 billion of the liquidation was in Bitcoin. But there was still hurting, still pain. And that sort of thing takes time to digest. So it's completely unsurprising that the market hasn't done a whole lot since then, because there's a lot of people who got smacked by taking leverage. So the hot money is not going to lead this market higher. The market will be led higher by liquidity and slow grinding growth until the hot money decides it's okay to come out of the shadows. So that's what we see. But what's important here is this cycle doesn't have a Celsius. It doesn't have a Voyager. It doesn't have an FTX. The impact of the liquidations is not going to be to cause an insolvency event, which causes forced sales. I think a month afterwards, we can pretty well say that even the rumors have been relatively small. So if there's no forced sales, why do we expect a sale on the magnitude that happened in 2022, which is what a lot of technical analysts are calling for? The answer is because they're trying to impute something without taking into account the actual circumstance. Personally, I find that sort of thing is very hazardous to one's financial health. At some point, however, the OG selling is going to abate, as I said, because as every seller who has ever lived sells, depends on who you are, 10%, 20%, 25%, 30% of your position, and then you scale up at a higher price. At some point that happens, and then you have the potential for another euphoria round. Won't happen immediately, but it could. The next and last thing to consider is how the network is done. So the Bitcoin network is still hovering near an all-time high, still looks like an incredible unbroken up and to the right chart of growth. And this year it has outpaced, actually, over, if you go back since the beginning of time, or over the last 10 years, over the last 3 years, it's outpaced price. Even assuming a reversion to the mean of outpacing price, just with this network where it is today, you would assume Bitcoin would probably get to the 130, 135K price. That's not bad. It's certainly a hell of a lot better than falling, and certainly it would be way more stretched if it fell even more. But understand that in the last 2 cycles, I'll call them, which aren't really cycles, but bouts of euphoria in the market, we saw that price exceed the network growth by a factor of 3 times. Now, history may not repeat, but it did in 17, it did in 21. Will it do it in 26? I don't know. I'm not Nostradamus, but I would say that human nature being what it is, probably euphoria will creep back in at some point. And you can think about what the catalyst could be. The catalyst could be sovereign accumulation. The catalyst could be Bitcoin being used as collateral. I've talked about this in spaces extensively. It doesn't really matter what the catalyst is, because the truth is maybe we're living in a simulation, maybe not. But what we've seen is that these sorts of things are baked. It may be euphoria will happen after it continues to drag on and fall for another few months, but at some point it will happen. Meaning, if you're selling now, unless you are very nimble, very quick, have no tax consequences, and aren't out of the market or on vacation in the 2 or 3 days when euphoria first starts, then I would be very, very reticent to sell here. And in fact, I have not sold any sats, nor do I intend to. In any case, that's my thought on the bull case. You can agree with it or disagree with it. I'd love to hear the comments. But as usual, stay safe out there. This market does look interesting and is going to likely stay that way for a while.